FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. As we continue our Blueprint Summit videos, as I continue to show exactly what my strategy is and how to use it. If you're new to the channel or new to these videos, do me a favor, go back and look at the playlist, the Blueprint Summit playlist, and start from the very beginning. It's very important that you do everything in order so you can better understand what we are doing. But without further ado guys, in this video, let's go ahead and break down type 2, 3, and 4 patterns and timings, and let's go ahead and jump right into it guys.
So type 2 patterns. Type 2 patterns essentially work like this. If it's a buy setup, all of this still applies. Everything that you see here still is the same thing, right? The only difference is that on a buy setup that's a type 2, you'll end up getting this. Literally. So price action will come to the bottom, stop, retrace, come back down, stop again, and then move out. And then this is your trade. It's like the same thing if you're looking at a setup for buying or for selling, right? It would be something like this. They would come up to the top, they would create the M at the top, and then come back down again. And the same thing applies as far as the boxes go for London and US session, right? So let's just say that this right here would be the session box. Let me change the color real quick. Let's say that this right here would be the session box for the London session, and then let's say that this would be the session box for the US session. The M would do like this. The W would be like this. The majority of the time, type 2 setups happen in London session. The majority of the trade setups for type 2s are happening during London session. There is one option that you would have, and it's basically what we call a trade of trading out of the edge. And what that entails is basically when you have the first leg form in Asia and the second leg forms in London. This is only for type 2 setups. And again, this is like this doesn't always happen, but it does happen enough to where you would need to know about it, obviously. So same thing if it was, if it's going up here, let's say this would be the first leg, and this would come up and do this, and basically your pattern would be first leg here, second leg there. If you get a trade out of the edge, this second leg typically happens before 4 a.m. Eastern Standard Time. So when this type of setup presents itself, the majority of the time it happens before 4 a.m. and the second leg happens in London session, at the beginning of London session basically. Once you guys start to backtest this stuff, you're going to see it. The more that you backtest, the more and easier that it gets. The less that you backtest and the more that you try to do it like during a live environment, the longer it's going to take. I can promise you that. So that's the longer that it's going to take for you if you don't backtest. You'll soon realize that backtesting is a major key to your success. Trading a type 2 setup is just as easy as a type 1. The only thing is, where does the M form? Type 1s form down here and up here, where type 2 patterns form here or form down here. That's it. Everything else is pretty much the same. The only difference that makes it type 1, type 2 is where does the W, where does the M form. Okay? Are you going to get a formation on a type 2 setup that can be basically like this, where you have like that? Yes, it's possible. It's very unlikely though. The majority of the time, it's going to be this. But is it possible? It's absolutely possible to do that. But majority of the time, it's going to be London. So if you're trading specifically the US session, definitely going to want to pay attention when we talk about trading the US session, because the setups there are just very simple, and I think you would have an advantage almost, because you already see what's happened during London to begin with. It's not about pips, Gerard, between the two legs. It's about candlesticks. So it's not about pips, how many pips in between the first and second leg. It's about candlesticks, right? So whenever you have a move like this, let's say you're moving up, let's say you're creating an M, right? And you're doing this, you're creating. This is, let's just say, a type 1. And then all of a sudden you get this, you get that, right? So you see where I'm getting with this, right? And then you get another, right, there's your M, right? Here's your M. We're not talking about pips from here to here. We want to count candles instead. So this distance here, what makes up this, you want it to be 5 or more. 5 or more candles. So 5 or more candles. The more candles that make up the apex between the first and second leg, the better pattern that you're going to get. For the simple reason that you have to understand that the reason that they're making this, the reason that they have to make this right here, the reason that they're making the M to begin with is to induce traders. Right, so think about the logic, what's going on behind it, behind the pattern. So if they do this, what does this move do? So it triggers traders to buy, right? Now, if you're a breakout type of trader, right, you're going to have buy stop orders above where the initial high and low are set of the Asian range, right? So by moving like this, this automatically triggers all those traders into a trade, right? At the same time, the people that see the retail traders, the other retail traders that see this big move here, they're like, holy crap, it's going. It's going. We're going to miss out if we don't get into the trade. We're going to miss out. Holy smokes. And so what is in every possible book about trading that everybody can buy out there? What does it tell you to do whenever you see a strong, big ass bullish candle, right? You wait for the pullback, and then what do you do here? Right? They tell them to buy because all they're seeing, they're expecting this. They're expecting this is what they're doing, right? And so they buy here. right? And there's typically like some kind of support here somewhere else on the chart, on the left-hand side of the chart, right? So they're told to buy right there. And so, cool, they buy there, and then here is where they get them stuck. Because they see this, and they're like, yes, we got in at the right time. But then you get a railroad track here, and then literally the next hour is like this. Where did they set their stop loss? Of course, they set them here. So what happens? They get taken out. So that's what happens. The best patterns produce 5 or more candles between the first and second leg. Yeah. So type 3 patterns basically work like this. You have I'm going to draw a line down the center of the Asian range, right? So here's what price does. Price comes down, comes back up, and it literally hits a brick wall here. And then it does this. That's typically what a type 3 setup looks like. There'll be other times where you'll end up getting the M or W, right? So it would look like this. It would look like that for a sell, right? For a buy, it's the same thing. It would basically look like this for a one-legged pattern. It comes from the top to the middle, stops, retraces, and goes. If it's creating an M, right, then it'd be something like this. Or if it's creating a W, sorry, it would be something like that. We used to see this a lot, but now I would say over the last year or so, since I trade, God, an immensely amount of type 3s, I only get one leg now. The 2 legs don't happen that often anymore. Okay, and so this would be your trade here. Same thing for, for the one-legged pattern. The trade is this. What we don't want to trade is if price action does this. If it does this here, moving along, and then it does this. We don't want to trade that. Okay, this would not be a type 3 pattern that we would trade. We want all of our type 3 patterns to come from the top or the bottom. We don't want them to be created from the middle. So if you see this and you see the Asian range coming out of the middle, you don't want to trade that unless it goes to the top or bottom first before it. So you could trade it if it does something like this, right? Because it came from the top, hit the middle, and then went. Or in the other case, if it happens to do this, come out of the middle like this, you want it to go to the bottom first, then go back to the middle, and then do that. But just straight from the middle like this, and then automatically it just drops like that, we don't want to trade that. We want to give ourselves an assurance that what we're looking at is correct. So if it does do this behavior, and you'll see it, you want it to come to the bottom, back up to the top, middle, get rejected from the middle, and then come back down. Okay. Now, very important, when we talk about these patterns, on the second leg of, let's say, a type 1 or let's say a type 2, right? And then on the one-legged type 3 patterns, the second leg up here or here, what you want to see ideally is going to be one of three things, right? You're going to want to see either a railroad track, which a railroad track, all it is this. It's a solid green candle followed by a solid red candle. Okay? It looks like a railroad track, right? You have two tracks on a railroad track. That's why it's called a railroad track, right? What you don't want to see, or what you don't consider a railroad track, is this. Something like that would not be considered a railroad track. So very important that you understand that a railroad track has to be two equal candlestick bars. Okay? Has to be two equal candlestick bars. All right? Cannot be one lopsided, one that's shorter. Basically, just keep in mind that you want the second bar, so this bar here, you want that to at least cover 75% of the previous bar. So it could be something like, let's say this here, and the next bar could be like this, right? You see the difference? That's still a railroad track. Okay? So just very important to note that. On the second leg, you want to see something like this. The other pattern that you would want to see is a star pattern. So what does that look like? Well, that would look like this. You'd have big green bar like that, and then you would have essentially what they call a doji candle, right? And then followed by another big bearish candle like that. So essentially it's like a railroad track, but with a little doji in the middle. The last one would be basically if you get a cord of wood, and essentially all a cord of wood is basically stacked. It's basically two railroad tracks stacked back to back. Right, so it'd be something like this. Right, and by the way, this could be 15-minute chart, hour chart, whatever. Mostly I'm talking about 15-minute chart. So if you think about it, each of these candles is 15 minutes. So 15, 15, 15, 15. So basically this, if you look at this pattern, this is what it would look like on a 15-minute chart, right? It's just back and forth, back and forth. On an hour chart, it'd basically be like this. Because it's just going back and forth, back and forth, back and forth, back and forth. So this would be a cow, a cord of wood. This would be railroad tracks, and this would be a star pattern. There's one more variation, and it would be something like this. So it's basically like the star pattern, just with an extra doji in the middle. The colors of this candle do not matter. It could be red, blue, it doesn't matter. It's just visually what it is, whether it's, doji, two dojis. The more of these that you get in the middle of a big bullish candle and a bearish candle, the better the confirmation is. So if you see this pattern here created on the second leg of an M, it's a big move coming. Because if you think about the process here, where they're basically enticing people for 30 minutes straight. And then once they have enough people trapped, then they drop. The next one, you could bet your ass it's going to drop and drop and drop and drop. So think about this. When this happens on a second leg like this, basically means they have enough traders trapped that they can go. When they do this on a second leg, they basically had to take an extra 15 minutes to convince more people to trade up, to buy, right? If you see this one here, it just basically means they took 30 extra minutes to get as many people as possible. Because you have to understand that for them to do these patterns, for them to do this M like this, right, they need liquidity, right, which is basically retail traders' orders. Whenever you press buy on Euro USD, somebody else has to take the reverse of that and sell that to you, right? You just don't buy, then magically you buy it, you know? That's what it may look like to you. But somebody on the other end has to take the sell option of that. And if the market maker's goal for that day is to create this type 1 setup like this, and all they're doing is getting people to buy, they're selling the opposite side of that. Do you understand? The only thing that they're doing is they're holding those sell orders. They're collecting those sell orders. So you're pressing buy. They're selling it to you, but they're holding it until they have enough orders. Once they have enough orders, then that's when they dump it all at once. And so that's where you get basically the move, this part of the leg that just goes down, 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 down. So understand that all this is market makers collecting orders, enticing people, in this case because of a type 1, to buy. They're selling it to you, and they're just holding on to the contract of the sell. As soon as they have enough orders filled to make the move, because they cannot make this move until they have enough liquidity. Where do they get the liquidity from? From you. From you buying. From you buying. All right. So let's talk about type 4s. So type 4 setups essentially work like this. They set their Asian ranges, and then all of a sudden during the Asian range, you see this. You're like, shit, this thing like started moving super early before the London session even started. Let's say that this right here is the London session, right? If that's the London session, here's what happens. They move back to the bottom of the Asian range. And up here, you'll get the star pattern, right? Or you'll get railroad tracks right here, and then they just drop. These type 4s only typically happen in London session. If it's a buy setup, then obviously, you know, the opposite would happen. So you would have You'd have market makers doing their thing, and then all of a sudden they go up. Let's say here's your London box. They come down one time, give you railroad track, star pattern, and then they take off. Again, same thing down here at the entry. You'll get one chance typically. Railroad track, star pattern. So the difference between the type 3 or the type 1 and type 4s is a move that happens literally at the beginning of at the end of the Asian session. So this right here is what gives it away. This sharp move that happens super early. Like you'll wonder, like, how come this move started so early during the Asian session? And then you'll get one push, because typically on type 1 setups, when you get the on type 1 setups, it's like this, right? You'll do this, and you'll do the M up here. The M, this part here, will never come down that far. So on a type 1 setup, same thing, the W happens down here. This W doesn't come all the way back up, all the way back down like that. So that's the difference essentially. Is the aggressive move that happens super late in the Asian session. You'll see it. You're like, why is the aggressive move happening so super early? And then you'll see why when they literally come right back to the bottom here, and it looks like they just hit a brick wall, and then they'll go. So I'm going to show you examples of all these, by the way, so you'll see what I'm talking about. So type 4s, I mean, it's very simple. You know, it's literally very simple. We're only looking for one leg, just like type 3 is only one leg, and you're looking for railroad track star patterns. That's it. You might get, I mean, occasionally you might get a quarter wood like that, but the majority of the time it's going to be star patterns and railroad tracks. In general, quarter woods don't happen very often to begin with. So it's mostly railroad tracks, star patterns. And by the way, type 4s don't have to go 50 pips or whatnots. That's not what they do. Because if they go up 50 pips, there's no way they're coming back 50 pips down. If I had to say a specific number, probably maybe 20 pips or less, which is this move here. You don't understand the pattern, or if you don't get the pattern, then you're not trading, right? Because that's what we're trading, is these 4 patterns.
All right, guys, so I hope this video brought you some value. I hope you now have a better understanding of the type 2, 3, and 4 patterns, along with the previous video that covered type 1 patterns. You should now know exactly what you are looking for. Guys, if you like this series, if you like the content, just do me a favor, like the video, subscribe to the channel, and we will see you in the next one.